Michael Burry has indicated that the stock market collapse he predicted is now underway, even though he recently joked that his followers are still asking him when the crash is coming. In typical Burry fashion, he has suggested that the S&P 500 could plummet by another 53% before bottoming out. And not to be outdone, Jeremy Grantham, another doomsaying investor and market historian, also shrugged off the recent upturn in stocks as a bear market rally. In a new research note titled Entering the Superbubble's Final Act, Grantham has warned of a dangerous mix of hugely overpriced assets, commodity price shocks, and a Federal Reserve intent on curbing inflation by cooling the economy. Grantham recently stated that each cycle is different and unique, but every historical parallel suggests that the worst is yet to come. Oh no! So let's take a look at the charts. But before we do, after this weekend update, I'm going on vacation until the week of September 20th. So if you don't see me, don't worry, I'll return soon enough. And now to the charts. And now we're looking at a 20-year monthly chart on the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this serves as a pretty good proxy for the Nasdaq. And I'm looking at the Nasdaq simply because this index has taken, say, a greater beating than the other indices. So let's just focus on this. Now, of course, here's the top. At that point there, we got a drubbing and came all the way down to the 50 EMA. We bounced up in that bear market rally, came up here to the 20 EMA and got reflected on down here, and we're continuing on down. I'm not sure exactly how much more downside we have, perhaps a little bit, but I think this is going to be a test of the previous low. Whether successful or not, only time will tell, but I'll give you some insight here. Looking at the oscillators, moving here into volume, that tells us absolutely nothing. Here into the MACD, you can see that there is still a very big separation between the slow line there in red and the fast line here in black. We're still above zero, but we're heading on down pretty quickly. Now, that separation, as you've heard me say before, holds a lot of volatility and sideways trading and perhaps some bear market rallies and then some failed upswings. So don't be surprised if there's a lot of volatility. We have a lot of room here to make up for, and that's simply going to take time, and there's going to be a lot of volatility involved. Here into the histogram, we're definitely very negative at that point there, more so than any other period in this 20-year chart. So we're starting to, say, go sideways on the histogram, which means that maybe things are starting very early, starting to bottom. Now, of course, with that separation of the fast and slow line in the MAC, we have a lot of time to make up for. Here, price rate of change, same thing. A big separation between the black line there and the red line here, which means, again, volatility. And we're at a very steep negative 10 on that, so we have a lot of repairing to do because there's been a lot of damage. Here in the RSI, a little bit of blue sky with the bottom at that point there. Currently we're at there, so perhaps a little bit of divergence at that point. Moving here into stochastics. Now, we had an attempt, it failed, came on down here. You have that little fish hook. We're getting close to that oversold territory. Will we go down into it as we did back in 2009? Very possible if things are as bad as they say. But I don't see things being as bad as they say, at least not yet. Moving on down here into the Williams, and the Williams also is setting up a divergence with that bottom there at probably a negative 100, but as you can see here, we have a bit of a divergence going on with that upward trend. Now, it does depend upon where this downward move stops and then reflects back on up, but I kind of tend to think that we do have a divergence going on, which tells me that we may be in the very, very early stages of bottoming. That doesn't mean that we've seen the bottom. I am just saying that the market is attempting a bottoming process, which could take months. Back up here to the price chart, and you can see that one more time. It looks like there's a fair possibility of us riding along that 50 EMA. If we come on down there, that may be the worst that it gets. I would say the probability right now is 50-50, but we could be leaning toward an improved market if we come down here and ride along that 50 EMA as opposed to shooting on through. Michael Burry is indicating we're going to shoot on through. I'm not sure it's there. Now, again, after this weekend's market update, I'm going on vacation. So hang tough. And until then, this is ChewDog Charts. Thank you.